Hi everyone, welcome to today's video. I am Ronica Brown. Today I am going to show you how you can basically pay yourself a low salary, save a lot of money on payroll taxes in your business. And this is only for those who are taxed as an S corporation. So I've been talking about this for the past couple weeks in posts about S corporation. One of the main reasons is a lot of business owners are hearing that S corporation saves them money, S corporation saves them money, but a lot of time they don't really understand how an S corporation saves them money. So I hope thus far you've learned that the only money that an S corporation helps you to save is basically on payroll, FICA, self-employment taxes. They're all the same thing. So it helps you that tax is about 15.3%, and when you're a business owner you have to pay this amount. So I demonstrated that an S corporation helps you to basically avoid paying self-employment taxes. Self-employment taxes, covers things like your Social Security benefit. So if you're an older business owner and you're concerned about your Social Security benefits, then maybe an S corporation is not the best entity for you. So you have to look at the full picture of your business and so forth to see if avoiding this tax is right for you. So that's the first thing, that yes, I hope you learned that S corporation save you money, and what it saves in your taxes is just your self-employment, aka your payroll taxes, aka your FICA taxes. The second thing I hope that you've learned is that because an S corporation helps you to save money on your payroll taxes, the IRS came in for years and years and years since S corporation has been around and said that, hey, S corporation people, since you want to be taxed as an S corporation, and if you are working in your business, you are required to pay yourself a reasonable salary. Ouch. So that's basically how they get you. Yes, it helps you to avoid this tax, but they do have the rule that you have to pay yourself a reasonable salary. So because of these two requirements, what we find in the tax world are that what we're doing. You think that have business owners are not compliant. That means a lot of people have S corporation, but they're not following any of the S corporation rules. Two, they are following some of the rules, but they're not really saving any money, so it really doesn't make sense for them to be an S corporation. And the worst of all, a lot of people are losing deductions being an S corporation just because an S corporation works a bit different from your basic LLC. So you have to make sure that if you're an S corporation, that you're looking at the full picture, that you're getting all your deductions, and that you're asking questions, because a lot of people will tell you that, thank you, Melissa, that they're getting all these deductions and they're really not getting them. And I have some business owners that I have to just show it to them that they're not, for them to believe it, because a lot of people don't really look at their return and so forth. But anyways, so this is the way how you get to a low salary. So your S corporation, paying yourself the lowest salary is basically how you save money. That's basically it. The lower amount that you pay yourself as a salary, that's how you're saving money. So one of the things that you can take advantage of is this concept of wearing many hats. Which direction should I go? Oh, this way. Many hats. Everyone knows when you're in business, when you're an entrepreneur, we wear many hats in business, right? Sometimes it's good, sometimes it's bad. But for taxes, it's good. At least if you're taxed as an S corporation, because what this allows us to do is to separate all the things that we're doing, and it basically helps us to demand a lower salary for the work that we're doing in our business. So it's basically a separation of work that you're doing in your business and work that you're working on your business. So how do you separate that so that you can prove that, you know, this salary is what is considered reasonable. No, you know, there's not a standard on a reasonable salary based on your industry, based on your role and things like that. Basically gets factored in. So there's not a set number for any profession whatsoever. So everyone has to basically ask these questions to make sure that they're at the lowest number as possible. So let me use an example of an attorney. So for instance, you're an attorney and now you're a business owner. Say for instance, before when you had a 9-to-5 job, say the compensation was, let's say, an attorney, let me think, an attorney, I would say, oh, this one is not working. Let me see anymore here. Okay. Say an attorney, they would make, let's say 180K. 180 is the point. This is basically salary, 401k, insurance, profit share, all these other things that company gives you as a part of your compensation. Some of them you get paid, some of the money you get deferred until you're older. Some cover insurance, and some of it is, you know, what the company consider, you know, share of profits. Some company may do stock compensation, whatever that bucket of money is. So for instance, you used to get 180K. Now you're a business owner, so you're not only going in. I'm gonna go to this. You're not only going in and doing your job as an attorney. You're basically now a business owner. So when you're a business owner, your time. So when you used to get this pay, your role as an attorney, this was 100%. You were doing whatever work that your employer needs you to do as an attorney. So for instance, you're a business owner now. So this is your time. So this is your 100% of your time in a pizza, in a pie. And now you're a business owner, so you're doing a lot of things. You're doing marketing. You're talking to your accountant, which you really don't want to do. You're talking to the insurance person. You're training people. You're hiring contractors. You're doing this. You're doing that. You're doing God knows what. So your time gets allocated across all these different things. So there's a method that you can say, so this is what we call a market-based approach, that you look at what the market is paying an attorney and just pay yourself, sell that. This is the easy way to do it, but this is not going to save you any money in your business as an S corp. So the better way to do it is look at what we call the cost approach, which is wearing many hats. Basically, you divide up your time to say what percentage of your time you spend doing certain activities in your business, and based on your competence and your skill level, you get to put a lower rate on those amounts. So for example, you're an attorney, and say for example, 35% of your time goes to your attorney work, serving your clients. 30% of your time. So this would be basically linked to, you know, this salary in the market work. You're not at 100% of time, you're only at 30%. Are you going to pay yourself 180K for this 35%? No, you're not. The next thing that you're going to look at, say for instance, 15%, the next 15% of your time is spent 50, 10, 3, that's the next 15% of your time spent doing admin, or let's say training your office manager or your new employee. So you spend the next 15% doing training. The next amount of time, say for instance, you spend the next 20% of time doing, say, marketing, business development, all that fun stuff. social media, hanging out, networking events, all of that stuff. So that's the next 20% of your time. Then you spend the next 10% of your time being the CEO of your business. So we don't want to go ahead and say that, you know, you're the CEO of everything, because for taxes, you don't want to be the CEO of everything, because CEO means pretty high salary, right? So 10% of your time you're being a CEO, and then this is what I'm at 30, so 20% left. And say, you know, the next 10% of the time you're doing, I don't know, 30, 40, 50, the next 10%, you're doing like, you know, financial stuff, and the next 10% you're doing whatever else you're doing. So this is basically how, are you competent as an attorney? Yes, you're competent as an attorney. So you're basically going to only demand a higher rate for this 35%. Everything else, you're going to put your skill level pretty low. You know, you're not an accountant, you know, you're not a CPA, you're not a financial planner, so the financial stuff, you're going to put a lower rate on it. The marketing stuff, you're learning, you may be working with a marketing coach, you may be doing different things, you're learning. You know, CEO, you're learning how to be a CEO, you're learning how to manage a business properly, you're learning how to scale your business, you're learning all these different strategies, so you put your skill level pretty low. So pretty much the only thing on here that's going to demand you a higher rate would be your work as an attorney, which would be the 35%, and everything else is basically the work that you're doing on your business, and this is the work that you're doing in your business. So you get to take out this portion and only pay yourself the equivalent to what this amount is, and that's basically how you can get to a lower amount. If you feel that you're paying a higher amount, you can ask your accountant to run an analysis for you on this website that's called RC Reports. And this will pretty much give you and ask them to do the cost method. This method has never failed. It's pretty effective in getting you, getting your roles separated and showing you how you can basically get down to a lower amount. The other methods basically are too high. So you want to ask for that. If they're saying that, oh, it's too high, you know, what you're saying is too low or so forth, you want to go ahead and ask for them to do an analysis on RC Report website and ask for the cost method, the many hats method, because you're a business owner, so you want to own the many hats activities that you're having. So now, since it's year end, and if you're thinking, well, I'm an S corporation, but, you know, I haven't been doing this, so, you know, what am I going to do at this point? So what you can do at this point is basically do a one-time payroll. A lot of people think that, you know, if they're doing payroll, they need to be doing it during the year. You don't have to. You can do just a one-time payroll in December. If you're the only owner of your firm, you can do one in December. A lot of payroll company charges about $500-600 to run a one-time payroll for you, and they'll get all those payroll stuff updated. If not, then you can just add yourself to your employee payroll. So it really doesn't matter if you've not been paying yourself on payroll for the rest of the year. You have until December 31st to go ahead and get all of those forms filed. So the point is, if you're an S corporation and you're not paying yourself a salary, this is one way that you can go ahead and start doing so and pay yourself a lower salary by only paying yourself for the time that you're spent doing your client work, and that's the work that you basically get a higher pay rate. These are the things that you're doing for the business. You get a lower pay rate for that. So in total, that gives you the lower number so that you can basically save at least $8,000. You know, if you're making basically over 150K to be able to save that amount of money. But anyways, that's it for today. Let me know if you have any questions on paying yourself a low salary, and hope you learned something today. Thank you.